If you're new to investing or you have a lot of money saved up, I'm sure you've probably heard this over and over again from a variety of different people. You should invest your money. But what does this mean? Why do people say this? How do I invest my money? There's a variety of questions that come to your mind likely when people say this or when you think about doing it. In this video, we're going to be going over a very brief overview of what investing is, especially for beginners. So if you're a beginner to this space, make sure to like the video and subscribe so you guys can never miss videos like this and get educated at the same time. In this video, we're going to be going over investing, ETFs, all kinds of different ways to invest your money, what are some of the best and worst investments to look at, and a variety of other factors. So the first thing we're going to start with is the psychology of why you're investing your money in the first place. You see, most people invest their money because they want to have, ideally, more money in the future than they have now. Most people would like to increase the value of whatever it is that they're buying over the course of a period of time. This could be short, this could be long, this could be a couple months, years, or even months, days, whatever. It's over a period of time. That's the bottom line. And the reason for this is due to things like inflation, which tends to eat up the value of the average American's purchasing power over time. Inflation dictates how much money is worth, how much money you will have compared to today versus 10 years from now. $20 spent at a movie theater today is not going to be worth the same as it will be in about 10 years. Lots of people look to assets in order to basically outperform or outgain inflation, therefore making their money more valuable in the future than it would be otherwise just sitting in a savings account or sitting as just cold hard cash. Now, if you've made a lot of money recently, or if you've just started making a lot of money and you think that you're either spending too much or that you're not saving enough, or if you want to have your money work for you, I'm sure most people, if you've asked, or you've probably thought of, if you can already think of it to begin with, is investing. Now, when people say, oh, you should invest your money, they probably have some different things in mind. If you talk to some older crowds, they're probably going to think of something like a 401k or a Roth IRA, and those are mostly geared towards your retirement. These are accounts where you're basically holding long-term stocks, options, equities, or whatever type of mutual funds that you might want to buy in them, and you're holding them till you're probably 50 to 60 years old or whenever it is you plan to retire. These accounts usually lock this money up for a specific period of time. There are tax benefits to a variety of different accounts, and we're going to make an entire separate video just to cover retirement accounts, so make sure you subscribe so you don't miss it. Now, as far as the boomers that you're going to ask about investing, that's what they're going to tell you. Now, if you ask somebody in a younger generation, or if you're on a lot of social media accounts, you're likely going to be told to make an account with one of the variety of different brokerages that are available to you. Things like TD Ameritrade, E-Trade, Robinhood, WeBull, and a variety of others. These are all examples of brokerage accounts, basically meaning that they are types of platforms that you can use to trade stocks on or invest in stocks. See which one fits your style of investing or trading the best, see which one you like the overall UI on, which one you're more comfortable with spending all of your money with. Once you've picked a brokerage account, or once you've picked a just brokerage in general, then you can actually start to invest your money. Now, once you actually have the money in the brokerage account, this is where it kind of goes up to you as far as what choices you want to make to do with that money. There's a lot of different stuff with portfolio theory and what people think are the best combinations of stocks or ETFs or anything that you buy in the market, really, on what to put in your portfolio to maximize your gains over time. But for the most part, I'm going to keep it simple in this video, and we're just really going to talk about stocks and ETFs. There are things like bonds or savings bonds or a variety of other more complicated type of financial instruments, but we'll get into those in another video. So let's start with stocks. Singular stocks, of course, are part ownership of a company. It's what you buy from a company that is publicly offering part ownership, and it comes with certain benefits, like, for instance, the increase in price of that stock over time or dividends paid out to you by the company. This is what obviously influences people to buy stocks, as ideally they're trying to get into something that will increase over time in value and they can make money. Singular stocks are typically riskier than other types of investments because usually if you pick one stock to put your money in, and if you put all of your money in, it can tend to get a little risky, especially if that stock's price drops. If that stock price drops, then obviously it's going to show that you're down quite a bit. I want to mention real quick though that if you have $5,000 in a stock and you all of a sudden lose $100 one day, just keep in mind, you have not lost that $100. The actual stocks that you own have lost value, but that does not mean that they are going to stay there forever. They could go back up, they could go even higher than that, and they could basically rebound entirely. This is something to keep in mind because a lot of beginners think that once they lose money in the stock market or they see their position value go down, they think that basically all of a sudden their position's worthless and there's no point in investing anymore and they should sell. But for the most part, people who hold long term, especially good, high quality, valuable companies, tend to always win. And even if there are dips and they do lose value in the stocks that they're holding, they do tend to go up over the long term. And that's something too that I wanted to mention to you guys, and that is the kind of different avenues or strategies that investors or traders employ in the stock market. It seems to me that there are three main categories that are really important that most people will either fall into when they start going in the stock market. The first one being, of course, day trading, which basically means you are buying and selling a stock on the same day. The second one being swing trading, which is basically buying a stock and selling it either the day after you bought it or week, month, or year even. And the third one, of course, being long-term investing, where you are buying and holding a asset or security for a very long time, like years long time. These three trading strategies are usually what are propped up most in today's stock market, and it's what most people, especially younger people, are going to probably advocate or tell you to invest like. But going back to the singular stocks argument, so singular stocks are, of course, a little bit more risky. And again, no investment is safe. Almost every investment is open to risk. Every investment is open to possible losses, but there are these things called ETFs, or exchange traded funds. They're also known as index funds. ETFs are pretty much the opposite of singular stocks. They're large funds that put together a variety of different stocks that basically track and manage those stocks in that kind of portfolio. When you put money into an ETF, you're investing into this portfolio of a variety of different stocks. ETFs are typically a lot less volatile and a lot more likely to continue going up over the long period of time because they're basically more managed actively by actual professional fund managers, and the stocks that these funds hold usually are high quality. If we look at S&P 500 index funds, for instance, we can see that there's a variety of really high quality, solid blue chip stocks that they hold. Most people who are long-term investors tend to invest in index funds due to the low volatility and overall safety that they feel with these types of funds. It's very set it and forget it type of mindset that you can have with these types of funds, and it's something that a lot of investors choose who don't want to have to actively worry about their money every single day. If you want to be more active in your investments and be more part of the everyday changes and drastic price, increases or fluctuations, then maybe single stocks could be for you. You really can't hope to make millions and millions overnight. This is something that takes a long time. But once you build up a proper stock portfolio and build something that's going to last not just for the next couple of years, but for the next couple of decades, that's when you know you're building true wealth. If you know who Warren Buffett is, he's an incredible accredited investor who runs Berkshire Hathaway and has for a long time advocated for long-term investing and, of course, index funds. He is, of course, a very wealthy, very successful man, and he has run a very successful hedge fund. So he is somebody who I think is worth listening to. And that's why I think long-term investing makes the most sense as far as trying to build wealth over the long period of time. For me, I'm more focused on getting my active income up, things from my job, from my brand, from things that I do in my everyday life. That's my active income that I can get from whatever I do, whatever hours I put in every single day, and I can use to fund my lifestyle. As far as my investments go, I'm not looking at my investments for daily income. I want long-term sustainable growth. And that's what I think most people who are new to the stock market get lost in. I think most people get lost in day trading, most people get lost in swing trading, and those aren't bad things. If you can become really good at them and master your craft with them, they are legitimate ways to make a living. I've seen plenty of people on the internet, plenty of people on TikTok, Instagram, every social media app who are successful day traders or swing traders, and they do it for a living. But it takes time. And again, this is my whole point with this video, guys, is that anything worth it in the stock market is going to take time. Whether it's learning how to do it, learning how to be successful with it, or learning how to be patient enough and not emotional enough to react when a stock is down maybe 20% on the day and you think it's gonna go lower, but then you sell it and then all of a sudden it goes higher. You see, it's an emotional game and it's a patience game. That's what it all really comes down to. Now, this is, of course, a super brief overview of what investing is and kind of just the overall psychology of investing. Let me know in the comments below if you guys have any more questions about investing, especially if you're new here. We love to see it, and I would love to help you guys out. We'll, of course, be making new videos all about investing and all kinds of things like that. So if you guys think that sounds interesting to you guys, make sure to like the video. Make sure to subscribe so you don't miss new videos. It's our goal here to help people become more financially aware aware and more financially literate. And that starts, of course, with you guys watching this video. Make sure to check out our WeBull link if you guys want to pick up some free stocks with WeBull. If you guys don't know what brokerage you want to start with and you want to start trying some, I would recommend checking out our WeBull link down in the description below. When you guys sign up and deposit $100, you guys get 2 free stocks with WeBull. So that's literally free money. You guys can take the money out whenever you want. You guys are good to go, and you guys can at least try the brokerage and see if you like it. If you don't, you can always move to a different brokerage and it's no big deal. But other than that, guys, that is all I have for you guys today concerning investing with beginners. I'm Kyle, the Finance Bro. Take it easy.